Hello everyone and welcome to this special video presentation, NBFCs in the New Normal. Today I am joined by Mr. R. Natarajan, the Chairman and Managing Director of South India Finvest, to discuss the critical role of NBFCs in India and how they must act to survive and thrive in the light of COVID outbreak. Welcome Mr. Natarajan. Thank you for joining us today. So Mr. Natarajan was an NRI for about 21 years and he returned to India recently to scale up the Indian business. He has been a proficient business leader and an accomplished professional with over 2 decades of highly successful track record in multiple industry sectors in different geographies. He has received multiple recognitions and among them is Hind Ratan Award for his outstanding services as an NRI. So tell us something about your journey so far, your key learnings, maybe how do you foresee the future?
So I came back to India last year, and our journey of building financial services businesses along with other business started way back in 2006. Okay, so we've tried many ventures, and then the NBFC piece we started in 2014, and then it went through different avatars and. In 2017 we took over a company, South India Finvest Private Limited, and then we got the conversion from NBFC to NBFC MFI, and since then, we have had an amazing zone. The branch profile that you are talking about, we have about 21 branches. We have about 55,000 customers so far, spread across both Tamil Nadu and then Karnataka, about 14 districts in overall. We cover about really 1/3 of the state of Tamil Nadu. Okay, just to give you a perspective about the growth opportunity and also the market potential. India is a country with about $2.8 to $3 trillion economy today, but the story is the growth story is going to be very secular. I mean, if you look at the countries that are really that are of similar size or even smaller size, with the consumption profile that we are having. The growth is going to be very secular. India is going to grow from 2.8 trillion or $3 trillion to 5 trillion, 8 trillion, $10 trillion. In fact, we're going to be one of the top 3 economies in the world. For that to happen, I always say there are 2 pillars that have to support this really growth engine that's on fire now. Okay, though there is a temporarily a degrowth because of the COVID, and everybody relates to that. But from a long-term perspective, India is a very secular growth story. So for that to happen, there are 2 pillars that have really support this growth. One is a very active and robust debt market ecosystem. Okay, that's where the financial services play come into the picture. The second one is very healthy capital market system. Okay, so with a country close to about 30% of the savings rate to GDP, we have enough really possibility for us to really have these 2 engines on fire all the time. Okay, so in my view, financial really services play is a very secular growth story. I mean, amongst many other sectors, right? So in my view, we have doubled our book and branch size last year compared to the previous year. But for a company of our size and for the country potential, we will be doubling our loan book and growth every year for the many years to come. So one of the learnings is not only for SAF, of course, we have one of the very high quality books in the industry, right? Okay, I mean, generally speaking, for the industry, if you don't do with quality in mind, if you don't do with process orientation in mind, you may get into trouble when an event like this hits.
That's great. That's really great. So my next question to you is that now NBFCs are playing a key role in inclusion, both financial as well as social. And it has gone under a significant transformation in the last decade. But there are a lot of changes that we are expecting to change in the future. So in your opinion, what are some of the things that India can learn from other geographies?
I'll just drop a few parallels as to how different countries have really evolved in the growth story, right? We are a country of 1.3 billion people. If you look at the GDP, debt to GDP ratio is one of the lowest, okay, in the developing or even developed worlds, okay. It's about 60-68%, but at an aggregate level. But if you talk about if we talk about different segments, okay, debt to GDP is very, very low. I would say it will vary from anywhere between really 20 to 80%. That's why you get that average, right? So I would say still, we're not adequately banked, okay? And we still have a huge gap. Okay, we have done well in the last 10 years, okay? But, we have only scratched the surface of the opportunity, and also really the potential that we need to really deliver on as a country, right? I think the things that have happened in the last 10 years has been really outstanding in terms of the, I would say, the convergence of technology and regulatory innovation, the government push, continuous and persistent push in really converting Indian economy into some kind of a digital economy, right? So all of this really put together, I would say, has created a platform or an ecosystem. Okay, probably there are no parallels, I would say, and everybody is looking at India and see, okay, how they've built an ecosystem, and I would say the Jam Trinity that everybody is talking about, the Jandan, the Aadhaar, and Mobile, that convergence, and then regulatory innovation of really multiple categories of NBFCs, and then small finance banks, and now you can even really go and really take a license on tap, bank license on tap, small finance banks on tap, and then so the regulatory innovation has been very, very rapid, okay, combined with the digital push and combined with the convergence, I would say. So the Jam really was the foundation on which really a lot of things have been built over the last 10 years, right? Most of the financial services that we are seeing today were probably only the domain of banks. Okay, so what NBFCs have done on top of this, the technological platform that we have and very rapidly evolving too, is they've done three things. I call it 3Ds. Okay, one is they have done the disintermediation, right? I mean, they have really removed intermediaries in the process, right? Mm-hmm. And then they have really disaggregated some of the really bundle of services. They have disaggregated, and then also they're in the process of democratizing the financial services play, right? So they've done these three things, and in my view, I mean, we've just started, and we have just scratched the surface of the demand opportunity. And also it's a fundamental need for a country like ours. I mean, still so many people do not have access to banks, okay, access to bank credit, access to even, I mean, of course, I represent the MFI piece of the total NBFC. I mean, the demand is huge. This industry grows about really 30 to 40% every year, and then it will continue to grow for the foreseeable future.
And my next question would be around that, this pandemic thing is going on. So amid this pandemic outbreak, how have you differentiated yourself? Any initiatives that you are taking, such as data-driven or leveraging the technologies, anything?
Okay, Ruby, South India Finvest is a well-differentiated financial services company. Okay, right. And if you talk to our partners and the ecosystem providers, they will really immediately relate to the kind of really service that we build, provide, okay, with a differentiated model. I would say, I mean, of course, technology is always an enabler, right? And how intense you're about technology in really removing some of the really subjectivities and also really discretionary element in really decision making. Okay, I mean, I think we identified this earlier on. So the technology adoption has been one of our key differentiators, right? And as I said before, this is a process play. NBFCs, and more so in really MFI, there are three things. Okay, it's very regulatory intensive. This is very, very scrutiny intensive with all the ecosystem players really scrutinizing on a day-to-day basis. And then third is really transaction intensive, right? So when you have a business where you have to get every transaction right, and you have to get every customer touch point right? So unless you have a very, very robust systems in place, it's very difficult to really replicate it on a day-to-day basis, right? And then it's very difficult to really get the quality in terms of the portfolio. Any company, and more so in a financial services and really manpower intensive company, for me, employee is the first pillar of any business building. So, we follow something called employee first principle, right? We demonstrate it in many, many different ways, right? I mean, I have one of the lowest attritions in the industry, and we have high employee engagement, right? I mean, we were even really rated by the Great Place to Work, and then they identified like the kind of the trust level between the employees and management is one of the highest in the industry, right? So the employee first principle, employee centricity is the first pillar that we follow, right? The second is the customer centricity. I mean, I always say in a business like this, societal equity, okay, that's primarily the respect that we gain from the customers is more important than the shareholders' equity, right? So like we take gaining customer respect and earning customer respect, okay, in every touch point is one of the very, very key differentiators, right? Okay. The third I would say is, I've already talked about it, the robustness of systems that we have, okay, right from the way we really source a customer, onboard a customer, and then kind of credit assessment that we do, and all the way to the disbursement, and then the collection process, and then the continuous really engagement we have with the customers, right? When the pandemic happened, like we were one of the first companies, I would say, if not the first company, to reach out to all the customers and then create awareness about this COVID, and then how they need to really look after themselves, and then I would say one of the other differentiators that we have is build business with compassion, what I call compassionate capitalism, right? And you really build business with a win-win kind of really mindset. Of course, you have to win, but in the process you also let others win. I mean, I would say these are some of the really key differentiators, okay, that has been reflected well in a once in a century kind of a pandemic like this. My quality of the portfolio continues to be very, very high in all the markets that we operate. My collection efficiency is high, okay, compared to all the peers in the marketplace. So I would say, I mean, these are some of the key differentiators.
How has COVID-19 impacted the demand and liquidity for the NBFC sector? And is there any long-term impact for the industry? Did moratorium help the borrowers as well as the lenders? What else could have been done by the regulator and the industry?
There was a temporary halt, okay, in terms of demand and as well as the liquidity, right? When the pandemic hit us end of March and early April, of course, April, May and June, it was a complete really demand contraction. Okay, we had one of the longest lockdowns anywhere else in the world, okay, for a country size, right? The regulators intervened at the right time and helped the industry to really get over this pandemic. And of course, we did not have a template. I mean, I don't think moratorium was given anytime in our history the way it has been given during the pandemic, right? So, I mean, the regulators really responded, okay, with a lot of measures. I would say the moratorium was one thing, and then liquidity injection measures, okay. They came with multiple tranches of liquidity injections, okay. They routed through the banking channels, and there was a little bit of initial confusion earlier on, but it was sorted out, and the industry moved on. So I would say yes, there was a temporary halt, but the demand is coming back now after the unlock was announced by the government.
What will be the new normal for NBFC industry, especially for the MFI sector?
Ruby, the one thing that this pandemic has done, not only to the NBFCs and financial services, but what it has done to the general industry is it has accelerated the technological adoption by various industries, right? Okay, we are serving the BOP customers, right? Okay, it's a very, very transaction-intensive industry, right? So how do you really bring in the technology and remove some of the really subjectivity and discretionary elements in decision making? I think as an industry we should really learn, okay, and we should really make sure that the process is absolutely really digitized, okay. And now the platform-based models are going to be the successful models in the future, okay. So anybody who's not really digitized fully, I think they have to digitize, okay. And we are well on our journey, and we are very, very advanced stages. I think we should really resist our temptation in terms of really capturing the opportunity, but make sure that we have the process bandwidth, we have the people bandwidth, we have the technology bandwidth to really handle the really transaction intensity of financial services business, especially in MFI.
Sure. Since you're talking about this, so I would like to know that there are any alliances that you're forming in order to add unique capabilities.
Yeah, Ruby, I mean, this is a continuous process, and of course, as I said, technology partnership is must, okay, in this. And then, of course, the equity and debt partnership, I mean, is one of the other things that we need to do, and also really like the ecosystem of really the SROs that you have, and the credit bureau that you have, and then they're doing a fantastic job, I would say. I think they have really, in my view, out of all the NBFC segments that we have, the MFI segment is one of the most really coordinated segments, okay, through the SROs that we have, both Southern and the MFIN. So the partnership is a continuous process, but we do have in a couple of BC partnerships, okay, and then we'll build more because they have access to capital, and then we have access really, like we have the network really go and really capture the demand, and then really like marry this too. So I would say, yeah, we have a couple of partnerships already, and we'll continually build on them as we move forward.
So before concluding, would you like to give any message to your fellow industry colleagues and ecosystem players?
The one message that I would like to really give, and also to all my colleagues, okay, in the industry is, this was a temporary out of demand. Okay, demand is not going to go away, and we should not really rush to really capture the demand without really having adequate really assessment. Okay, there is enough market to be really enough market to go after. Okay, but I think the process orientation is going to be the very, very key factor in really ensuring that our portfolio quality continues to be very, very high. I think we need to avoid credit losses. Okay, even in an industry, even in an event like this, MFI segment, it was first to be impacted, but also first to be bouncing back very, very rapidly. The collection efficiency is one of the highest now. I mean, like probably about 90-95%, right? It's going to be back to its pre-COVID really levels, maybe in the next couple of months, right? So, I mean, I think, we did really go through a little bit of rough patches, okay? And then we have learned enough lessons, and then, but there was an ecosystem between the regulators and between credit bureaus, between SROs, and even the broader society. I think everybody came together and helped us really get over this kind of a crisis. I think the future is good, and we need to really, build the business right, and then, chase the growth. But, before that, like, quality is very, very important.
Thank you, Mr. Natarajan. Thank you for being here with us today.
Thanks so much.